Technical analysis, I think a lot of people that do it kind of really don't understand it. Some people think it's like astrology or reading tea leaves, but it's not. It's about graphical illustrations of psychology. Now, when leadership of a market is changing from bears to bulls or vice versa, sometimes the price action can manifest itself on a chart as something that looks like what we would call a reversal pattern. Like your traditional head and shoulders pattern is a reversal pattern, right? Sometimes a trend changes really quickly. Like, look here. It basically, in 2 days, the bears took over from the bulls. So this is something that you maybe call, a V pattern. And you can kind of see the same action here. So when the leadership changes really quickly, then it could show up as something like that. When the leadership changes over a slow period, it could end up looking something like that. This is like your classic rounded bottom. So the rounded bottom or the rounded top is something that could appear on a chart when the leadership is changing slowly. So this here, I would say it's your rounded bottom. Importantly, check this out. Where did this rally end? Okay. Remember, we just talked about levels, trends, and momentum. For whatever reason, this level is important. And sometimes you know why a level is important. Sometimes you don't. But the good news is you don't need to. Now, if something is in a rally and it's getting to a price level that had been support previously, there's a good chance the rally stalls out. This is because of buyer's remorse. We talked about seller's remorse, but this is buyer's remorse. People bought here, and when the price dropped below their level, a lot of them are like, this sucks. I made a mistake. If I can ever get out at break even, I am going to. So when the price finally gets back up to the level that had been support, if enough remorseful buyers place sell orders, the level that was support can turn into resistance. This is a situation of buyer's remorse. You can also see buyer's remorse here. There are people that bought at the peak that when the stock fell out of bed the next day, they're like, I made a mistake. If I can ever get out of break even, I'm going to. So when the price finally gets back to the level that was the peak, if you have enough remorseful buyers placing sell orders, the level that was a peak becomes a peak again. It's an old saying on Wall Street, sell at former peaks. And this is why, and it refers to the psychology of buyer's remorse. People buy at the peak, they get underwater, they decide to hold on to their losers. If it finally gets back up to their price, they place sell orders. And if there's enough, well, the level that was a peak can become a peak again. So you can see buyer's remorse manifested in resistance at former peaks and resistance at former support levels.
I absolutely love it. 13, I love your comment here. Bag holders waiting at the station to board the pain train. Absolutely love it.